What up, people? Y'all gotta stay tuned to this video right here. Y'all gotta comment, like, and share this because this is very important. I'm about to go through Bitcoin, the S&P 500, and the Nasdaq 100. Starting off on the 4-hourly charts. Anyway, since we're right here on Bitcoin, we clearly see this thing breaking out and it's making some crazy moves. Obviously, we see the first pattern right here. If you go closer, I'm gonna just appear that it's here, but y'all can see the W right here. But that's the M right here to the W. Level 1, level 2, level 3. So this could either be the peak formation right here, and they could just turn the markets down at any point in time. Like, they can rise as high as they want to because they, like I told you, they already broke out of market structure. They're scamming people now, like I was trying to explain to you, because it came out this gap. So anyways, the whole thing here, and if we just look at this as a larger pattern, as another M to a dub right here, right? This would be level 1. As y'all can see, these levels been marked out. And so they're going to the previous levels they should have been on to. And as y'all can see back here in August, I was expecting this thing to come and recover this candlestick right here, but it never did. So right now, I'm expecting this thing probably could continue on up to right here to complete level 2. And level 3 will be a hit to this the 200 EMA on the daily. And then once this happens, it's going to be immediate reversal, like extremely fast. So I'm going to zoom out even further for y'all on a weekly so I can see it. Because also on a weekly, because the reason it should have hit that 200 that was on a on a daily chart is the 100 EMA on a weekly chart. So there'll also be a hit to the 100 EMA. And y'all can see the 50 EMA and the 100 EMA is literally touching right now. So the instance we come and hit this 100 EMA, because that's what we should have been there when we came down here. We should have came down, then jump back up, hit the 100 EMA like I was expecting. Because after 100 EMA hit, that's when we supposed to get a super drop. Because there's not one time ever in Bitcoin history that we ever got rejected, let alone being below the 100 EMA. And that'll be just in time for this immediate drop. And like I already knew around this certain time, this is when the crash is going to happen. Like I've been telling y'all this for the longest because I had this chart up for over a half a year. So I already knew it was going to crash around this range. So anyways, as soon as we hit this 100 EMA, it's going to be a quick, immediate reversal. And it's going to be a recovery of both these candlesticks all the way down here to this red line at the very least. I'm really looking at this thing going down like 14,000. So like I say, we get a hit up here, so we could come up here to around $25,000. But I believe it's going to be just below, just to trick everybody off, basically. So just around $25,000 and immediate reversal, all the way down to at least $15,000. So we already talking about the initial candlestick for the week, and most likely this is going to be a day. We talking about, a cool 40, 50, 60% drop. But that's not really the drop. This is them scamming everybody that hopped in since right here around 17,000. If you bought anything over 17,000, let me go back so y'all can really understand this. All right, on 4-hourly, right? So what's going to happen? Because like I already told y'all, it wasn't supposed to break out of this yellow line right here. Anything above this is going to be gone. Like if you bought in at any candlestick at 17,000 or higher, you're going to lose your money once they drop the market. Because they're going to recover all this at one time. And that's what I'm trying to stress to y'all. Y'all don't know when that's going to happen. At this point in time, it could, like I said, it could be M to the dub to a whole nother pattern. Or it could just be a peak formation of this pattern right here. But there's no telling until it actually makes its move. But y'all see, it's making its move. And they could easily finish this off, like for the end of the week, for the weekly candle. So they could just skyrocket this up super fast throughout the weekend and Monday, and then hit you with it on Tuesday. Because the thing is, y'all might not know, but it's a new lunar new year on January the 22nd. So they'll probably they also mental marker of when they doing things. You feel me? Since they're restarting everything around right now. Because like I said before, it's all the market. It's not just Bitcoin. The Bitcoin is just clear because it's open 24/7. So you can see the moves clear as day, what they're doing before the stock market. Because they be closing weekends, closing in afternoons. But not Bitcoin. So I'm gonna hit y'all back on this weekly. So like I said, when boom come up here, we look for a drop to around $15,000 to $14,000 in this general range. And that's just one candlestick, basically. I'm talking about a candlestick from 25 to 14, 15,000. That's crazy. But like I told you before, I'm expecting this thing to come all the way down to $5,500 on a weekly chart. The monthly chart, it shows 6,400, which is this blue line right here around this general range. But either way it goes, these candles need to be recovered. And like I told you before, this right here was a previous recovery of all this. So they're doing the exact same thing they did before. And this is a candlestick that we need. But this thing is about to start smashing down. Y'all got to get ready. And also another thing y'all need to know is whenever they make this move, don't think they're going to let you take your money off them platforms. That's the whole point of me telling y'all this and giving y'all this extra warning. Yeah, it's going up now, but you can still make money, get your money out. But still, it's going to be a point in time they're not going to allow you to withdraw anything, even your actual money, and that could disappear too. Because everything on those platforms is IOUs. So keep that in mind. I'll hit you on the monthly so I can see the overall pattern. Got the M to the dub. We're in our retracement from the head and shoulder formation. Take the drone up so I can see it. Come on now. Look at that candlestick. And this on the monthly. If it came all the way up here, that'll be a hit to the 50 and the 20 EMA on a monthly chart. So this one move alone is about to hit all the EMAs at the same time. So I want y'all to think about that. On a monthly, weekly, daily, and the 4 hourly, we all about to hit all the EMAs. I mean, look how clear it is. Look at that, about to hit the 100 and the 50. I'll load the 20 down here. And also y'all gotta realize too, like I told you before, never went below the 100, but I get rejected. So I mean, all the signs are here, and it's been clear as day, like I'm showing y'all. And this is what they doing. Like every time they about to, really about to scam you, they do something like this. They play mental games and get everybody to hop on in. It's the bull market, you guys. It's not the bull market. I already told y'all why. So let's go to this XPX. All right, so we got you right here on a 4 hourly. And I've been expecting this thing to come down because it needed to come and recover this candlestick right here. And that's around 4,200. And y'all can see we got one hit above the 200, two hits above the 200. This is about to be a third hit because you notice these candlesticks stop right below the 200 EMA. So this is why it's about to be a third hit to appear that it's about to be a bull market. It seems like all of them following each other, but they are, but not in a bull market fashion. So we could see this thing skyrocket all the way up here to around $4,200, and then we see the reversal. I'll hit you on the one on the daily, and also this will be, as y'all can see, it's like we were just dwindling down, boom, boom. So we bounce out 2050. Breakthrough could come up here. It'll it'll look like a recovery, but it's not a recovery, and we should definitely not pass the box of this candle around 4,300. Anywhere below 4,300 we should be reaching. Like I said, between 42 to 4,300. Boom, then we'll get the reversal. Now check this out on the weekly. Now weekly chart, where we need to look for these and take out the drone. So boom, look at it. After the 20 cross below the 50, we got one tap to the 50 once, twice. This is about to be the third time. It's always third time's a charm. So it's either they could come up, break out, but it'll have to bounce off that 50 EMA that we keep getting rejected by. So if we don't bounce off that, guess what's gonna happen? We're gonna fly down. Look at the 100 EMA. One hit to the low, two hits to the low. The third hit to the low is gonna break through to the next EMA, which will be the 200 EMA, which is around $2,500. But most likely, it's going to come right here. Because y'all can see the two previous lows that we hit the 100 EMA. Never hit 200 yet, but the 100 EMA got lower and lower. So the thing is, it's going to be even lower when it's actually dropped. But we have our levels here. Because after this first initial drop, though, I'm expecting this thing to immediately come all the way down. After we hit the 42, 4,300 range, we should get a nasty candlestick. It's going to be like this. It's going to be the gaps missing, anything. You know what I'm saying? It's going to be looking really nasty because it's going to hit it down here to the 200 EMA. And y'all can see my previous videos, same chart on here also. Because it's the same, same resistance, same supports. And they all doing the same thing. So boom, I slide over. So like I say, I believe this should be the first real drop because this is the monthly chart. I believe a monthly candlestick could literally take us down here. It's probably starting next month, obviously. Could take us down here from this 50 EMA, like right below the 50, all the way down to the 100. But I'm expecting this thing to at least come down here to 1,500. This is me being generous. Because at some point in time, they have to transfer the stock market into their crypto market. Because y'all see what they're trying to do with everything. They're trying to turn everything digital. This isn't digital. But like I said, it'll end up being cryptocurrency at some point in time. So I'm just saying around 1,500 should be the low for the market structure. Go a little further out. No, I'm going to go to the 3-month chart. Maybe you can see it better. Yeah, boom. As y'all can see the 2 hits up here before the third one broke out. This is why I say it should be the low around $1,500. That should be support as it was resistance before. Now, if it breaks below that, it's gain. I won't even mess with the stock market because, I mean, boom. If it breaks below that, we're looking at $1,000. You know what I'm saying? Like around $1,000 at the you know, at the very, not the very least, but you know what I mean, around $1,000 just to cover these candlesticks. But then we got these candlesticks, and now we coming all the way down here to like $725 for the low. So that's also a possibility. But like I said, if it break below this red line, $1,500, it's over. It's over for the S&P. It's over for Nasdaq. It's over for the stock market and everything going to crypto because something needs to recover that. Just like when we seen this crash back in 2008, 2009 range. It's the same year that Bitcoin started. That is where all the money went to. Where's the money going to go to? You get what I'm saying? Like they have to put that money somewhere. So I'm hit you right here on the Nasdaq on the 4 hourly, right? Same thing. Expect this thing to hit the 200 EMA a while ago to recover this candlestick. You know, similar to the S&P, and that should be around like $13,000, right? So obviously we're making the same move, and we should be reaching all the way up here. It's around $13,000 because obviously if S&P move that way, it has to move because it's the same thing basically. 500 versus 100, you know. Anyways, you come up here, hit these, boom, and then a high projecting, like I said, around $13,000, and then we just get that reversal at any point in time, and it's gonna be fast, like I said. Look on a daily, so you're still below the 200 EMA. So boom, we come up here, there'll be a hit to that 100 EMA also, and it'll be a hit for the third time. Look on a daily, boom, finally below the 100 EMA, 1 hit, boom, below on it, 2 hits, boom. This will be the third hit to the 100 EMA, and then right here on the bottom, the real low is right here because we couldn't break below the previous low, which whatever be around 10,600, right? So that's why I stopped right here. You see the stopping pressure in this candlestick right here. So anyways, they stopped just below that because once we come around $10,600, we about to start flying to the downside when it's actually a support level. You feel me? So they had to come with a nasty candlestick. It's probably gonna start from well before that. But once you see it around 10,600, just know that thing's about to go flying. So like I said, 1, 2, 3 hits to the 100 EMA. So we're gonna get a reversal coming on a weekly. See the same thing. Hold on. Take this off so I can see even better. On a weekly, boom, once 20 crossed below the 50, boom, it came up, hit the 50 one time, hit it twice, now you're about to hit again for the third time. And as y'all can see on this one, it'll be the third time coming to that low, around 10,600. Y'all see even clearer now. So once he come around there, we flying down. Like I said, we got to recover all these candlesticks. Like I said, it's the same thing basically. Hit you on the monthly, turn the drone back on so y'all can see. This one also is another pattern. We got the M to the dub right here. We're in our retracement for level 1. And like I said, we're just coming down and recovering. And I'm just being generous also with this also because like I said, it's the same thing as the stock market. So around $7,000 is the low. Well, not the low. That'll be the second drop. This, like I say, the first initial drop, it hits 200 EMA right here on the monthly, which would be around the same range, 13,000. Like I said, all these things are hitting the EMAs for the last time before they drop to the next zone. And so we should be looking down this 100 EMA for a slowdown around 6,500. After we come down here, it's around 9,500. It'll be 9,500, then a 6,500. And like I say, being generous, saying this is the low because this is previous resistance and they finally broke through. We're going to use this support, and that's around 3,800. So that's what I'm trying to say the low is for the Nasdaq, 3,800 for the market structure. But if you drop below that, like I said, same thing with the S&P. It's over. You might as well be looking at crypto if you're still here. Anyways, anything I just said is not financial advice at all. Y'all growing, y'all make your own decisions, but like, comment, and subscribe. Peace.